Let's get to our first guest then in the second hour of the show. Rishi Kohli of Pro Alpha Systematic Capital joins in with his view on the markets. Hi Rishi, thanks very much for joining in. First, I wanted to ask you about the Nifty, because we're seeing a little bit of, strength coming in above 6100. Would it be enough of a conviction for you to go long at current levels?
Yes, I think Nifty is looking positive right now for the short term, and a couple of weeks back on this show I had said that the Nifty continues to remain a buy on dips market, and that's exactly what has happened. It declined a bit from there, and then from around the 200-day moving average, there were a couple of attempts to bounce which initially failed, but over the last 2-3 days have held up pretty well and continued to move above 6100. So the way that the multiple bottoms around 200-day moving average have been formed, and the overall patterns that have formed technically on the charts over the last few days, makes it very clear that the Nifty, after the initial buy on dips approach, continues to remain a short-term momentum market, and I wouldn't be surprised to see it going back to the all-time highs over the next few weeks.
Rishi, interestingly, you have a trading call on State Bank of India. You've chosen that over all the other private banking names.
Right.
Why?
Yeah, because there is a bit of underperformance on that as of now, but that's what makes it more interesting, because some of the private banks like ICICI, Axis Bank have actually already bounced a little bit, whereas State Bank still remains on the lower end of its band. What has happened in State Bank is that it had made a bottom of around 1450 in August-September of 2013. From there it had rallied to 1925, and then from there it has fallen back to around 1450 earlier this month, from where this current bounce has started. And it's pretty clear a double bottom around 1450 is there, and from there at least a minimum 38% retracement is definitely very quickly on the cards, which would take it to around 1630, 1640 levels. And interestingly, the 50-day moving average is also placed there. So very easily one can keep a stop loss at 1450, which is the double bottom, and go long for the target of 1630 to 1650.
Okay, Rishi, before we get back to your picks, we have the India VIX futures which are kicking off next Wednesday, which is Feb 26th. Do you see a lot of interest, and would that be a product which you would be taking positions in and advising clients as well?
Sure, I think it's a very interesting and positive development that the VIX futures is being launched. Even on the US markets, when VIX futures and VIX options were launched many years back, the market for volatility as an asset class had developed. So there are a couple of interesting things to mention related to the VIX futures. The first obvious thing is that one can take a clean view on volatility after the introduction of VIX futures. Currently you have to do it via options. You go long straddles or strangles, and then you hedge the delta. But there is some gamma risk which remains. There's some theta effect that is there. A lot of that will go away, because one can take a clean view on volatility and go long or short the VIX futures. And because of that, volatility basically is almost like an asset class. It's a separate asset class. If you look at equities, debt and other things, volatility considered globally as an asset class. So once the VIX futures is launched, over time what we've seen in the US or globally with VIX ETFs coming in, those kind of developments would happen over the years in India, which would be very interesting for people, because they have another asset class which is inversely related, inversely correlated to the Nifty, especially in times of stress. So it is very interesting development. I'm sure volumes will pick up over time. Initially, of course, we'll see how that develops. So a few interesting things, to be cautious about, however, are that VIX futures will have a backwardation contango similar to what we see on the Nifty futures, depending on people's views of volatility, a couple of months down the line, or a couple of weeks down the line, or in the current week. So on the basis of that, the VIX futures movements, would give a different return compared to the VIX. It wouldn't exactly be the same. So that is one thing people need to keep in mind when they do their calculations.
Very quickly, your trade on Tata Steel?
So Tata Steel, again 200, around 195, 200, it made a bottom around August 2013. From there it had a very strong rally to 435 odd levels, from where it fell back to 340. Interestingly, 340 was the 38% retracement of this entire move from 195 to 435, from where it bounced to the 50-day moving average and found some resistance there, came down, It has taken support around the 10-day moving average in the last couple of days, and the 10-day, 20-day moving average upward crossover has also happened. So it's a very positive overall pattern on the charts. The daily MACD is in buy mode, and I think it might take a couple of days to navigate the 50-day moving average, but it would 95% probability be able to do so and then head back to 435. So I would have a target of 435 on it with a stop loss of 359, which is low of the last few days where a strong hammer was made.
Okay, Rishi, any disclosures?
No positions on SBI and Tata Steel. Nifty, of course, we trade in the fund.
Okay. All right, Rishi. Thanks very much for joining in at this